Hi, Warren and William here from Smartest Data. So let's go to the very basics, the what, the why and the how of stock markets. Okay, so we always hear about stock markets. So what is a stock market? Why is there a role for stock markets? How do stock markets work? And most importantly, should you be involved? So in this video, I'll give you answers to these questions, a few tips, a few calculations, and at the end of the video, I'll give you a few tips on being prepared to invest. So let's go over the video. So this is a general overview of the stock market. To be clear, the video is geared for people who have limited or no understanding about stock markets, stock exchanges, but would like to start and to be independent in making your investment decisions. Now, investing for the first time, or if you've been investing for a while, investing in the stock market has become so simple, fast and cheap. Lots of trading apps from Schwab to TD Securities to Robinhood. Maybe not a completely equal playing field, but let's get started on building your knowledge and skills in equity investing. This will be a fairly straightforward guide to the stock exchange, so let's start with the very basics. Stock exchanges are found around the world across a wide range of countries with different degrees of economic development and different political views, from the US to China. Operating under defined rules as stated by their local regulator, a stock market has two main roles. The first is to be a primary market for companies looking to raise equity capital. The new equity capital will then be listed on the exchange or via an initial public offering to list on the stock exchange for the very first time. The second role is to be a secondary market for the exchange of securities, change the shares, providing a marketplace where all investors can transact in shares and other eligible financial instruments with close to zero operational risk. In these two main roles, the stock exchange is fundamental to providing capital for companies to grow in an economy. The stock market can be seen as a barometer for the local economy. Periods of growth and good returns, low risk to medium risk when there's some uncertainty, and to high risk and falling returns when there's an economic crisis. Of course, the stock exchange is not the only source of funds available to companies. Keep in mind, the key difference in investing in stocks is that you take on the business risk of a company. In investing in a company's debt, this is known as taking on the financial risk. Okay, in terms of market capitalization, the US stock market absolutely dominates the global exchanges. But what is market cap and how to calculate market cap? So market cap is measured at two levels. First, the company level and then the overall stock market level. Okay, so let's take a look at market capitalization. What is it exactly and how to calculate it? So here's the formula: market cap, share price times the number of shares. Okay, so let's do some quick calculations based on the market cap formula, the number of shares times the share price. I'm going to do three calculations here. All these shares are listed at the current share price of $20. So the variant is the number of shares. Let's take a quick look. So $20 times 540 million shares equals 10.8 billion. Clearly a large cap company. Next example, $20 times 125 million shares equals a market cap of 2.5 billion, a mid-sized cap company. Next example, $20 times 27 million shares equals a market cap of 540 million, a small cap company. At the index level, the index market cap equals the aggregated market cap of all the constituent equities in the index, be that geographical or sectorial. So keep in mind, market cap changes constantly. In talking about a stock exchange, their critical role is to provide all companies, large, medium and small, with a way to raise equity capital. So you become a shareholder, so what do you get in exchange? You get to own part of a company, which means you have the residual claim on all corporate earnings, which hopefully translates into capital gains for the share price. And you also could receive dividends. So not so bad, eh? Also, as a shareholder, you can vote on key issues put in front of shareholders by the board of directors. All in all, you and millions of equity investors help finance the development of businesses, and when a business expands and profit grows, hopefully this will be reflected in a higher share price and, as we saw before, leading to a higher market capitalization. Of course, the reverse could also be true. Remember, it is easy to manage a poorly financed company with third-rate products and no managerial guidance. All corrections and drawdowns, being the fall in share prices, are swift, severe, and tend not to discriminate. So let's take a quick look at the cruel world of negative compounding. At first, what drops 20% will take a 25% increase just to recover. A 35% fall will take a 54% increase to recover. A 50% drop needs to double. A 90% fall needs to increase 10 times. And a 90% drawdown does not happen by chance. It is probably game over. What is the role for a stock exchange? A stock exchange supplies a marketplace where a wide range of investors, individuals acting on their own account or institutional investors, come together to exchange the ownership or to buy sell shares on the exchange. In an economy, the exchange has various functions, some official and some just by its very presence. The stock exchange plays a role in the real economy. The stock exchange must provide transparency in the price discovery process, treat each market participant equally, to provide a ready and safe marketplace for the sale and purchase of stocks, and to set the standards or rules for the conduct of various market participants. Due to its very presence in an economy, the stock exchange assists in providing an indicator to measure the economic condition of a country or sector, and encourages an investment culture and to provide a greater understanding of investing in stocks. Now, a key issue is price transparency, which is an important part of the role of a stock exchange. The individual share prices quotes are set by supply and demand forces that exist in the market as buyers and sellers place orders, typically a bid and an ask. The wider the bid-ask spread, the greater likelihood that the stock could be illiquid. Key to the function of an exchange is the order flow in the bid-ask spreads, which could be maintained by market makers to ensure orderly and fair market. Stock exchange will act against any market participant that act on inside information or price manipulation. So let's take a look at the continued role of the stock exchange and one important role, which is the IPO. So the name unicorn has been given to a startup where the initial public offering IPO, they were valued at over $1 billion US. So the IPO seems to be coming at a later phase in the business cycle for some companies, in particular in the tech sector. Also keep in mind, there are many large privately held companies such as IKEA which have never listed. Well-managed startups with a compelling business proposition have unlimited access to amounts of capital from sovereign wealth funds, private equity, venture capitals, foundations and endowments. Over the last couple of years, it could be that the main reason for delays in IPOs could be the increasing access to unlimited amounts of capital or seeming unlimited amounts of capital, which could be making the IPO and the exchange listing a less pressing issue. How does a stock exchange work? We now know the concept of market cap, so let's take a look at the market capitalization of the world's largest exchanges. The world's largest stock exchange is the New York Stock Exchange, which has a market cap over $28 trillion US, representing around 32% of global market cap and the highest trading volume in the world. The second largest exchange is just around the corner, which is the NASDAQ at around about 13 trillion. So combined, they are close to 47% of total global market cap. At a time of incredible dominance of the US stock market, there's another interesting aspect. The number of publicly traded companies in the US has halved over the past 25 years, from more than 8,000 companies in 1996 to around just over 4,000 in 2022. So why list on the stock exchange? What are the benefits and what are the drawbacks? The advantage to listing are access to capital, liquidity for shares which may previously been privately held, access to additional capital by issuing more shares, greater visibility, analyst coverage and interest from institutional investors. Also, the shares could be used as currency by the company to make acquisitions. But there are also some disadvantages to listing, which are the significant costs associated with going public, higher costs associated with compliance and reporting. increased regulation, which could have a negative impact on a company's ability to do business. Also, a greater emphasis on short-term targets in order to beat their quarterly earnings estimates. So to answer the most important question, should you be involved in the stock exchanges? Okay, so it's understandable that after a drawdown year like 2022, when the stock markets in the US fell dramatically, there is some fear about investing. Okay, so there is the saying, you have to be greedy when everyone else has fear, and then you have to have fear when everyone else is greedy. But this does have to be justified. Even with a pessimistic economic scenario, companies can benefit. For example, higher inflation can lead to pricing power. Higher interest rates can just lead to deleveraging, the general cleaning up of the balance sheet. Recession can also lead to restructuring. So if considering investments, there are 5 key points to consider. The first is having command over the data, having access to data, understanding the data. Then following on from that, the second point is to understand valuation techniques. The third point is assets can be mispriced, and this can happen over a long period of time. The fourth is make sure at the first stages establish your circle of competence. And as always, do your due diligence and research before investing. Okay, so there's a brief intro into the stock exchanges around the world, how to prepare to invest in stocks, and a couple of reasons to be positive on stocks at this point in time. So with that said, if you like these videos, like, subscribe, and ring the bell, and see you in the next video.